A question. Do you believe everything you read or watch about trading strategies? I ask because in today's episode I cover a strategy rule I've read about in almost every article on the subject. But my analysis puts this widely accepted rule in question. I'll be right back after this brief message. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. If you've been following this series, you'll have seen me build an Ichimoku based trading strategy step by step. The final task is to add a trend filter based on the Chikou Span line of the indicator. It's widely acknowledged and documented that this will help to filter out unprofitable trades. However, as you'll find out, this wasn't quite what I found. So let's start by looking at what most of the documentation about Ichimoku states. And when it comes to the Chikou Span, which is the yellow line that you see here, the consensus seems to be that if this is above the cloud, then that produces an environment which is good for a long position. And when the Chikou Span is below the cloud, like it is here, that produces an environment that's good for a short position. And so typically this line tends to be used as a trend filter in that way. So let's look at a quick example of a Tenkan-sen, Kijun-sen crossover signal, like the one we've been developing in the strategy, and we can see that there's one of those right here. And you always need to look at the Chikou Span 26 periods ago. And so if we go from the point of the crossover back 26 bars, in this particular case, we can see that the Chikou Span is right here and it's above the Ichimoku cloud. And so if we were using this as a trend filter, this would allow the long position to open. Now we need to go to the end of the chart to see why we need to look back 26 periods. And that's because, as you can see here, the Chikou Span is only drawn 26 periods behind the current price. So the value of the Chikou Span doesn't exist in this time frame here. So let's move over to our code now, and I've added 3 new lines here. One of these is calculating the value of the Chikou Span, and the other 2 are calculating the Senkou Span A and B, which of course form the Ichimoku cloud, and we're looking at all of these 26 periods ago. Because, of course, when we compare the Senkou Span 26 periods ago here, we need also to be looking at the value of these 2 lines, also 26 periods ago, to know whether the Chikou Span is under or over the cloud. And I've added an extra condition into the if statement here, which, as well as the previous condition, the AND operator here says that the Chikou Span must also be above the maximum of the Senkou Span A and the Senkou Span B. So in other words, the Chikou Span must be over the Ichimoku cloud. And that condition is when we get a bullish crossover, so in other words, is the condition for a long position. Now down here we've got the condition for a bearish crossover, and so now the additional condition in the if statement states that the Chikou Span must be below the minimum of the Senkou Span A and B, so in other words, underneath the Kumo. If those conditions are not in place, then we simply return no trade, which means that the trade is not allowed to execute even though we had a crossover. But when it is, we can either open a long trade or a short trade. So let's now test out that new condition and start off a back test. And we'll come back in a moment to see how that performs. Okay, so that's now completed, and the first thing is that this does not look as good to me as the previous results we obtained when we weren't using this trend filter. But we need to look a little bit deeper and compare this to the results we had last time to know for sure. So if we consider the results from last time, which you can see in blue here as the baseline, on which to compare the effectiveness of this new trend filter, then we can see that from the orange line that we have here. And as you can see, side by side, this looks nowhere near as good as the baseline. So this got me thinking, if this is the performance that we're left with after we've filtered out those trades where the Chikou Span was on the wrong side of the cloud, then what would the performance be of just those trades that we did filter out? And so I ran a different backtest where I effectively reversed the rules. And here I said that a long position would be allowed when the Chikou Span was either in the Kumo or below it, and vice versa for a short trade. And the results of that are shown by the grey equity curve here. So in other words, we'd filtered out what were on average profitable trades. And there are more things to take note of here. If we look at the final part of the equity curves over here, where we saw this substantial growth, interestingly, while one set of positions that weren't filtered out are performing very well, the ones that we did filter out were performing poorly. But there are also instances here where the trades that were filtered out are performing better than those that were kept in. And so by combining both sets of these trades together, i.e. not filtering them out at all, we then end up with this far superior equity curve that we see in blue. So what are the conclusions from this? Well, the first thing that comes to mind for me is that it proves you can't believe everything you read. Almost all of the other videos and blog posts about the Ichimoku indicator talk about using the Chikou Span in the way we tried to use it here. But certainly in the example of our strategy, which was the Tenkan Kijun crossover, that certainly does not seem to be the case. So does this mean that the information about Chikou Span is completely wrong? Well, I can't say that at this point in time, because we've only attempted the implementation of a single Ichimoku strategy. And who knows, when I get round to the Kumo breakout strategy, maybe this will add some value. However, at the moment, I have to say I'm not hopeful about that. What I would say though is that if any of you try out this strategy for yourselves and you find a way of making the Chikou Span trend filter more effective, then please let me know by posting a comment underneath the video. If you want to implement this strategy into the MQL5 programming language, then you will be interested in the next 2 episodes. In episode 18, I'm going to cover what's called the CI Ichimoku class. And this provides a much easier way of implementing Ichimoku strategies into code. It's the class that I've used, and I found this to be much simpler than the normal mechanism of implementation of an indicator, especially with Ichimoku being a more complex indicator than most. And then in episode 19, I'm going to cover the code that I used for the crossover itself. This is a little bit more complex than the code you might use for a moving average crossover, for example. And that's because of the way that the Tenkan Sen and Kijun Sen lines are constructed. And so in this video, I'll show you the exact code that I decided was most efficient in order to produce these crossover signals. Before you go, do you want to find out more about how Darwinex helps thousands of traders just like you to attract investor capital? If so, either click on the Darwinex logo on screen or find other links in the video description. Now until next time, trade safe.